space. And I believe that this counter is well poised to move till the levels of 650. So in the EMS space, followed by Keynes Technology. So these are the two counters, Sirma and the Keynes. We are finding these two counters better play in the EMS space.
A very significant update coming through for Gabriel India. This is the automotive ancillary company. Among other things, it is a manufacturer of shock absorbers. It is up about 20%, not about exactly 20%, because it is at upper circuit today. And let's pull up some of those lines so that you understand what I'm talking about. This is part of the Anand Group, and what is going to happen is that all of the automotive companies or businesses under the Anand Group are going to be consolidated and housed under the roof of Gabriel India. Now, what is important for you to understand is that a lot of analysts have said that the acquisition of, or the companies that will be acquired by Gabriel India and that will be housed in Gabriel India are better in terms of margin profile as well as return ratios, as a result of which the operations are likely to improve quite significantly. We've got a viewer, Hemendra Nanavati, who's bought at levels of 380, and so he's making a substantial gain, more than doubling. And the question is, should he hold on? If he's holding on, what are the prospects for the long term? Asta, I'm sure that you've looked at the latest development. What does it mean in your opinion, and would you hold on?
Yes, I would like to recommend hold on this counter, because if I look about the development, yes, the development is positive. Apart from that, if I look up to the fundamentals of the Gabriel itself, the fundamentals are pretty rock solid, because they are now looking for the more acquisitions and mergers, which can be the growth driver for this company, and they are now diversifying into the new product line also. So I think diversification into the new product line and looking after the merger and acquisition along with the development which is going on make this counter an attractive bet to deploy the funds in. So buy on dips as well as a hold strategy is recommended for this counter. Initial price target can be set at around 950 to 980 odd levels.
Dips on Gabriel India is the view coming in from Asta, and the stock is locked in upper circuit as we speak. All right, Narendra from Hyderabad is calling us. Narendra, hi, a very good morning to you. How can we help you today?
Yeah, this is Narendra. I wanted to discuss with, good morning everyone. I wanted to discuss with G Entertainment.
Okay.
So I bought 300 quantity at the price of 294.
Okay.
So current loss is 45,000.
Okay.
So recently the stock is moving up. So can I hold or can I sell at the right moment? Can you? And apart from that, can I purchase current price like Apollo Hospital?
Okay.
Can you discuss these two stocks?
Okay, I got your question, Narendra. I'll take this up with Asta quickly. Asta, do you think Z Entertainment is a good counter to continue to hold, or should he sell that and buy something like an Apollo Hospitals?
As we see the Z Entertainment, because now the promoters infusion of fund is going on of around 22.4 billion, and they will be increasing the stake to 18%. So that can be a positive news. Because, but what I believe that despite of coming this news, the stock is not able to perform that strongly. So idea here is to partially book losses and exit from this counter, and can make entry into the Apollo Hospital for that matter. But I think that defense space is still looking very strong. So whatever loss he will be making in by exiting in the this Z Entertainment, I think defense counters like Bharat Electronics and Bharat Dynamics are more or well suitable to recover those losses. So rather than going for Apollo Hospital, we suggest something in the defense space like Bharat Electronics.
Okay, that's the view that Asta has, and Bharat Electronics is something that she's choosing to buy over Apollo Hospitals. All right, the next question is from Dhruv, who's writing in from Mumbai. One more question for you, Asta. He's asking whether he can buy Natco Pharma at the current levels from a 5 to 7 year perspective, and wants to know if he can buy now or wait for the fundamentals to improve further. What's the view like? And if not Natco Pharma, anything in the pharma space that you like?
If I talk about the Natco Pharma, I think right now it's better to wait for some more time, because what we have seen is that their performance has shown some sort of recovery, but still the outlook which was provided by the company was a muted one. So on that basis, I think it's better that if stock sees some more downside from here, to enter those level. In any case, if he can switch to some other pharma space, then I think DV's level is well placed at this point of a time to show more upside from here. So in Natco Pharma, if anyone wants to make entry, buy at the lower level. But if any other counter which we are finding better in this space, then DV's level is our preferred choice.
Lab over Natco Pharma. All right. Let's take our next caller. Pradeep is calling us from Bengaluru. Pradeep, very good morning to you. How can we help you today?
Good morning to all of you.
Good morning.
I'm having Navin Fluorine 10 shares bought at 3708. Now I wanted to know whether this share I will hold or book profits now.
Okay. Help me, Pradeep, with a sense of why you bought it. What was the intention? Do you intend to hold for the long term, or did you buy it simply for a period of less than 1 year? First of all, when did you buy it?
I intended to buy it for long term. I have bought it about two years back.
Okay.
And my vision is for another 1 to 2 years.
Understood. Okay, so you're not in a hurry to sell. Let me get a view then on this refrigerant gases company, inorganic fluorides. So specific view, I think, Asta, if I'm not mistaken, there was some buzz about increased export opportunities, but then I don't know if that actually did pan out. But the company has done well, if I remember correctly. Return over the last 6 months is up close to 50% or thereabouts. So would you hold?
Yes, definitely, for the price target of 5,100. Now, if I talk about this counter, first of all, the margin guidance which was given by the management was at around 25% EBITDA margin guidance I'm talking about, and that too for FY26, which seems to be pretty good. Apart from that, what we are seeing that the company has having a very strong order book, and they are a good play in the CDMO space. And now CDMO space is on the high growth trajectory. So if I combine all these factors, I think that this stock has still potential to move more upside from here. Hence, a hold is recommended from my side with the initial price target of 5,100 to 5,300 odd levels.
That's where Navin Fluorine stands. Next question is from Anita, who is writing in and wants to know about Tata Motors. She's been holding 100 shares of Tata Motors, bought at 951 a piece, and sitting on a huge loss. She's bought it at elevated levels and wants to know as to what should be the next course of action. Swati, I'll come to you on this one. Should she continue to hold, or is there a further upside that you're seeing on the charts?
No wonder Mahima, she has bought at elevated levels, but no need to book the losses at the current levels, because I believe that probably in near-term future we are likely to witness a positive momentum in this particular counter. The breakout level lies at 750. If it manages to clear that level on a longer-term horizon, definitely on the upside, the door gets open for a target of 840 to 900 levels. On the downside, it has a very crucial support formation has been done at around 620, 600 levels. Those are acting as a very strong support levels. For a shorter period of time, the view is cautious, but if she manages to hold on for at least more than a year and so, then definitely she can hold on for immediate target of 840 to 900 levels.
All right. 4 listings today, 3 of them fresh issues or rather debuts on the stock market, and you see that a couple of them have actually made quite the debut. Among them is Ellen Barry Industrial Gases, which listed at 492 rupees per share and has gained from that point, registering a premium of, over 30% at this point. It even defied the grey market estimates. In fact, we caught up with the company's chairman and managing director, Padam Kumar Agarwala, and joint managing director, Varun Agarwal, about their post-listing plans. Listen in.
You are into industrial gases with on-site and off-site as well. How will your strategy be going forward from here on with respect to your expansion plans?
We have doubled our capacity, rather more than doubled in the last 3 years, and definitely it would be our endeavor to do better than that in the coming years. Definitely, we would like to go for both merchant and on-site in the days to come. That will be more on opportunity based.
Varun, if you can take us through what is the kind of that opportunity and how your revenue mix will be, because you get a higher margins, if I'm not wrong, from on-site. So what will the mix like maybe in a year or two?
So thank you so much for having us on the show. I think in FY25, our on-site business contributed about 17% of our top line. We expect the on-site business to contribute a little bit larger, maybe about 25% in the years to come, just because, our strategy is going to be expanding into both these segments. And while on-site has a higher EBITDA margin, merchant actually allows us to reach a wide number of customers, and so both of these businesses will continue to be important to us.
Can you give us a sense of the kind of capacity that you will be adding on-site and in merchant in the next 2 years?
Sure. So currently the capacity that we own on our balance sheet, own and operate, stands at 1,370 tons per day. We are planning to ramp this up over the next 1 year to about 2,200 tons per day, and that difference of, say, about 800 odd tons will be through combination about 350 tons of on-site and about 450 tons of merchant, and that's over the next year that we are planning.
And when do you expect the entire plants to become operational and and start generating cash and revenue for you?
So one of our plants, which is a 220 tons per day merchant plant, will be operational within the next 4 months. This is in advanced stage of construction, and we have 2 more plants which we are planning, which we expect will be up and running in about a year's time. And so once the plants start operating, then the revenue starts flowing through over the next sort of couple of months.
So FY27 would be a year when you have the full operational revenue coming in from these plants. Mr. Agarwal, what is the kind of revenue potential for these additional capacities that are coming in?
So look, last year we did 300 crores plus of revenue on a capacity which was practically only 600 tons per day. And we had added this incremental capacity, which got us to 1370 only towards the second half of the last financial year. So the capacity now, if it grows to 2,200 tons per day, we'll obviously see a multifold jump in our revenue numbers.
Mr. Agarwal, can you give us a sense of the kind of geographical expansion that you're looking at? Because you spoke about the fact that merchant allows you to go far and wide, while on-sites are on locations there. So what is the kind of geographical expansion plans that you have?
Sure. We started in the east, went down to south. It is our strategy generally to be a strong player in whichever geography we are working. And now we are not present yet in the north and western India. So we would look forward to add capacities on a preferential basis in these 2 locations, that is western India and northern India.
Okay, and that would be through on-site or through merchant?
On-sites generally depends on opportunities. You can't create an on-site demand. So if there is a customer, definitely yes, for on-sites we are ready anywhere in India. Our primary intent in this case is to have merchant plants, a strong merchant production, which definitely if we have on-sites, it will sort of support the on-site production as well.
Varun, you're also reducing your debt by 200 odd crores. Will that benefit flow in directly to your profitability, and what kind of gain that you can see as a result of debt reduction?
So yeah, we'll effectively become a debt-free company by paying off the debt from our IPO proceeds. And of course, our plan is to continue to expand. So while there will be a short-term gain, by saving on this almost 210 crores of debt, the interest on that, but ultimately the plan is to keep expanding And, the cash on the balance sheet will be used for that. As Mr. Agarwal said, we have plans to expand in the north and the west. We are also planning 3 plants, as I mentioned earlier, which will require significant amounts of capex. So the idea is to use the cash on the balance sheet for growth, and we are very much a growth company, a growth stock, and we'll continue to show strong growth numbers.
Mr. Agarwal, my final question to you, you cater to multiple sectors, pharma, chemicals, steels and others. Which is a sector that you see as a key driver for you in the next few years?
Our traditional sectors will continue to drive our growth. We also see certain emerging sectors like solar, and we would like to foray into supplies to those categories, in addition to banking strongly on our traditional sectors like pharma, bulk drugs, and iron and steel.
All right, so that was the management of Ellenberry. Let's in fact pull up the stock, and like Alex mentioned, it did have a bumper listing and up 33% versus its issue price. So good D-Street debut for sure, and the future also looks promising, right? They've said that they'll pay off the debt. They're looking for capacity expansion, which will aid profitability by FY27. So that's with respect to where Ellenberry stands. Our next question then is from Gautam, who's writing in from Mumbai and wants to know about Aavas Finances. Wants to know if he can invest in Bajaj Housing Finance or Aavas Finances for the next 12 to 18 months. Asta, I'll come to you on this one. Which one would you choose?
So I would like to go with Aavas Financer over Bajaj Housing, because what we believe that Bajaj Housing has not been able to perform strongly after the listing. Maybe valuation concerns are always there for this counter. But looking after the Aavas Financer, I believe the kind of growth this company has posted, it makes a point for it to have the stock in the portfolio. So we are recommending Aavas Financer as a buy, but at the lower level of around 2050 to 2030 odd level, with a price target of 2150 to 2200.
All right, so that's the view on Aavas Financiers versus Bajaj Housing Finance. We have to slip into a very quick break, but we've got more time on the other side to take all of your questions, starting with Snehit's question, who's writing in from Hyderabad on Bank of Maharashtra. Do stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
Hi, welcome back. You're watching Ask Profit, and I promised that I would take Snehit's question on this side of the break, and that's exactly what I will do. He's writing in from Hyderabad and asking about Bank of Maharashtra, which he's, it seems like he's holding, but I do not know at what level he is bought. He's wondering whether to hold or sell, both from a short-term and a long-term perspective, but he's not defined that. And so let me go across to you, Swati, on the charts. How does it look, both from the short-term perspective as well as the long-term?
Alex, my view is definitely positive on this particular counter. Why I'm positive? Because on the weekly chart, if you look towards the line chart, the counter is forming the inverse head and shoulder pattern. It's on the verge of giving the breakout of the neckline, which comes to nearby 57.20 levels. If it manages to give the breakout of level, upside momentum can be seen towards 265 to 68 levels. So view is definitely positive. One should definitely hold on their long positions. Downside, it has a crucial support at around 53. So by maintaining that as stop loss, you can hold your long positions for immediate target of 65 levels.
Okay, so that's with regards to where Bank of Maharashtra stands. The next question is from Mayank, who's writing in from Alwar, Rajasthan. He's a query regarding TARL, that's Transformers and Rectifiers India. He's asking whether he can continue to hold for the next 6 months or not. He's holding 1,500 odd shares, bought at 487 a piece. Currently sitting on a loss of 27,000 odd rupees. Swati, what would you recommend? Should he continue to hold for the next 6 odd months to recover his losses?
My view is a little bit cautious because from the last 2 to 3 months, the counter is continuously trading in the formations of the low bottoms, lower highs and lower lows. So I believe that the more selling pressure is likely to be intensified. As of now, the counter is hovering near the cluster support zone of 460 levels. If it breaks that level, more selling pressure will be get triggered, and which might take a counter towards to 420 to 400 levels. I will suggest to keep a strict stop loss of a 460 and hold your long positions. If you get any pullback rally towards to 500 and so level, exits your long. But at the current market price, you can hold on by keeping a strict stop loss of 460 levels.
Okay, all right. I'm coming back to you, Swati, on this next question. Rajesh Maheshwari is writing in from Indore, one of our long-term viewers, and he's got Balaji Mines at a price of 2,658. 75 shares is what he's got, and he's incurring a loss at this point. He's looking for a short to medium-term outlook on the stock, and he's asking for what the prudent course of action is from this point. Does he book his losses and move to something else?
See, as of now, currently from the last 2 trading weeks, the counter is really doing very well. We have seen a very strong pullback rally from 1,500 to almost now 1,800. I believe this rally is likely to be extended towards to 2,000 levels. So the initial targets will be 2,000 levels we can see in the near-term futures. Downside, it has a very good support at around 1,700. So I will suggest to hold on this particular counter by keeping the strict stop loss of 1,700. If you get a rally towards 2,000 and beyond that level, 2,100 can be seen. So try to exit your long positions on every rise, or you can keep elevating your stop losses on the high side. Keep trailing your stop losses on high side. So 2,000 will be the initial target. I will suggest to hold on this particular stock.
Hold on, Balaji Mines is the view that Swati has with respect to where charts are concerned. All right, our next caller, Shankar, is calling in from Kolkata. Shankar, hi, a very good morning to you. I believe you have a question on SJVN.
Yeah, I'm having 500 shares bought at 40 rupees.
Okay.
It is now trading at nearly 100 rupees. So
Correct.
should I book my profits or should I hold on for another, say, 1 or 2 years?
Okay. Got your question, Shankar. I'll take this up with Asta. Asta, he's sitting on profits of almost 30,000 odd rupees and wants to know if he can continue to hold SJVN from a 2-year perspective.
So I would recommend a hold on this counter, although what we have seen that the bottom line performance was not that very rock solid in the Q4 of FY25. But if I look at the other parameters like the kind of annual or a financial year profits they have posted, it seems to be quite strong because there was a strong growth in FY25 bottom line as compared to FY24 bottom line. So overall, the financials given by the company seems to be steady, and hence my recommendation for long term is a hold on this counter, although I am setting my price target to somewhere at around 115 to 120 odd levels at the initial junction.
Okay, we've got our next caller. Vinod is calling us from New Delhi. Vinod, namaskar. How can we help you today?
Namaskar. I'm fine.
Yes, I can hear you. Please go ahead.
Yeah. I have IDFC First Bank 450 shares at the rate of 73.
Okay.
And my view can be short-term, long-term, depending upon the recommendation.
Understood. Okay. बट आपने ये शेयर कब लिया था और उस टाइम पे आपका क्या थिंकिंग था, क्या सोच था?
I thought when I get the profit, I will sell it. But now since it was not moving,
yes,
and today it has come up the profit. Otherwise, it was in the loss only.
Yes. Okay, so you're wondering whether to book out. Okay. Okay,
yeah,
understood, understood. Okay, so Swati, then on the chart, since he's moved into the green, he's wondering whether to book out or is there potential upside. We asked a technical analyst this morning, and the view was that you can acquire even at this stage for a target of slightly above 80, if I remember correctly. Is that a view that you also have?
Yes, rightly pointed out. All the analysts are as of now positive on all the PSU banks because we have not seen a rally when the Nifty was trading at the higher levels. Now these are the PSU counters banks, especially they are giving the breakouts on the technical front. My view is definitely positive on IDFC First Bank. You have rightly pointed out the 82 is the likely target we can see on the technical front. Downside, it has a very crucial support at around 71 levels. We have seen from the last 6 to 5 trading session, the counter is holding 71 levels. So it will not be a major loss even if the stop loss get triggered. So I will suggest to hold on your long position since it is trading at the CMP itself. Upside, I'm looking for a target of 80 to 82 levels on the high side. So hold on your long positions by keeping a tight stop loss of 72.
Okay, by the way, the latest trigger seems to be a note that came out by Investec. They've said various things about the prospects for the bank going forward, but they've also placed their target at 90 rupees per share, which seems to be what has caught the attention of the street. Every day we tell you what's lined up on Know Your Company, and in case you're tuning in for the first time and you don't know what I'm talking about, let me tell you. We have a show at 11:30. It's called Know Your Company, and this is driven primarily by our research team. And we pick up one stock a day. And today's stock is Fino Payments Bank. We delve into the details of the operations of the company. We look at the valuation metrics, and we try and find out for you, if you are an existing shareholder, to find out what the prospects are for you, and also to give you a sense, actionable insight about whether you should buy this stock or not. So what are we talking about today? How much is the existing business likely to grow by? What is the outlook on the commission-based income for Fino Payments Bank? And various other aspects, including what happens to the promoter shareholding structure post the Small Finance Bank license. We will also be speaking with the management, Rishi Gupta, who is the Managing Director and Chief Executive Officer of the bank. That is lined up, as I said, at 11:30 today.
All right, so that's with regards to where Know Your Company stands. But our next question is from Asit, who's writing in from Thrissur, Kerala. He's holding IGIL, that is International Gemological Institute Limited, 150 shares at 494 a piece, and wants to know if he can add more at the current levels. He says he's a long-term investor. He's bought at elevated levels, certainly, because the stock is currently trading at 368. Astha, what's your view like? Should he continue to hold something like an IGIL, buy more at the current levels, or what should he do?
So if I talk about the IPO, because the IPO came in December, I suppose, and the issue price was 417, because the price bid was, the issue price was 417. And what we have seen, the stock is not able to perform strongly on the bourses. Maybe there are 2-3 reasons behind it. First of all, the elevated valuation. Secondly, the kind of business they are into. So I think that business is also having certain sort of constraints in the terms of growth, if I talk about, and hence what we are seeing, and not a very strong, steady set of numbers posted by this company. So all in all, we are not very much optimistic about this counter. Idea here is to book partial losses and exit from this counter and remain invested in the partial quantity, but be vigilant about the results, because if something good comes in the result, maybe the stock can again move till the levels of issue price. Otherwise, we can see some more downside from here.
Partial losses on IGI is the view that Astha has, and look out for the earnings as well, is what she's saying. By the way, they follow calendar year as well. All right, our next caller, Murli, is calling in from Bengaluru. Murli, hi, a very good morning to you. How can we help you today?
Good morning.
Good morning.
Yeah, I bought 200 shares of Home First Finance.
Okay.
At the rate of 356.
Okay.
I'd like to know the future prospects.
Okay.
Whether should I hold or there is a better future option available.
Okay, got your question, Murli. I'll take this up with Asta. Asta, I know that you like Awas Finances already, but Home First Finance, what's the view like?
So Home First Finance is looking good to us, and I think it's better to stay invested in this counter with a price target of 1500, definitely higher from the cost price also. Now talking about this counter, this company is totally focusing towards the digital innovation and of making this, home ownership more accessible. So my idea here is the kind of strategies this company is adopting and the kind of CAGR growth which we are expecting on the basis of their focus. We believe that they will be posting the top line and bottom line growth with a CAGR of more than 10% in the coming years. So idea here is to stay invested in this counter with a price target of 1500.
All right, the next question is coming in from Kerala. Shiju is writing in and he's asking about JP Power. By the way, there was buzz, and in fact, if I remember correctly, our colleague Vishwanath Nair had exclusive source-based information on acquisition of assets of this group. And quite a few assets are on the anvil, so this could be something that could react in the future. We've got Siju, who's bought at levels of 19 rupees, and he's looking at whether to hold or sell at this point. It's in the red right now because he's bought a significant quantity. On the fundamentals, do you have coverage, Asta?
Yes, and what we believe that although there are certain news flow which is going on in the stock, but the kind of financial performance they are posting simultaneously is not very attractive, because what we have seen in their bottom line is that they have posted, at least for the Q4 of FY25, the numbers were pretty negative. And on that basis, we are not very much comfortable with this counter. So idea here is to try to exit at the higher levels, because the cost price is little higher. If I taken it rightly, it is more than 18 rupees, if I am not wrong, Alex.
Say that again, please.
What is the cost price of this?
The cost price was 19 rupees, so very close to the current market price.
So that is what I am suggesting, that try to exit at the higher prices of around 19, because 18.6 is already going on. So we are not very much comfortable with the fundamentals of this company.
Very quickly, get a technical view as well. Swati, on the charts, what would you do with a JP Power bought at levels of 19?
I would like to suggest to hold on this particular counter, because after a long period of time, it's giving a breakout, and I believe it has a potential to reach up to its 52-week high, which comes to nearby 23 levels. So if you want to keep a tight stop loss, 17.50 will be act as a crucial supports level. So keep that as a stop loss and hold your long positions. For immediate target will be a 20, then beyond 23 levels can be seen.
Okay, so that's with regards to where JP Power stands. Our next caller, Govind, is calling in from Bengaluru. Govind, hi, a very good morning to you. How can we help you?
Hi, good morning. I have a query regarding the currently listed Kalpataru.
Okay.
I have 500 shares at 414.
Okay.
So I want to know, should I hold or should I sell? Like looking for medium term.
Okay, got your question, Govind. I'll take this up with Asta. Asta, what's your view like?
So we were not very much optimistic on this counter, even when we discussed this counter on your channel as well. So idea here is to book partial profit, definitely, because you are getting the chance to exit at a profit. Because what we have seen, the company has posted continuously losses. In fact, in the 9 months only, they have started showing profitability. So whether that is sustainable or not, we really need to see. And on that basis, what we believe, the valuations were stretched. And hence, our view was neutral on this counter. However, we have seen that this stock has not listed at a very strong premium as the other counters like Allen Berry and Globe Civil Projects. So overall, we are sustaining with our view that book partial profit in case if you are getting it, and remain invested in the partial quantity. Let's see how the coming quarters pan out for this company.
Vijay is writing in from the UK, and he's pointing out that the last time when he had asked the question, I had said that he was up early. He's telling me now that he hasn't managed to sleep because of the heat wave in Europe. And he says that it was 22 degrees Celsius at night. Oh my God. Vijay, I must tell you that all of us here in Mumbai would be sleeping. We'd be, as they say in Hindi, ghode bech ke sote ho,
with
sore
ACs off, probably.
Exactly. Like we'd be sleeping peacefully at 22 degrees at night. But anyway, Vatek Wabag is the name of the counter that he'd like to know about. Swing trade is what he's looking to try and get into at this stage. And on the charts, therefore, Swati, what's the view?
See, in this particular stock, my view is a little bit cautious because we are continuously witnessing a selling pressures from 1680 levels and not showing any kind of a reversals at the current levels. I will suggest to exit the long positions because the positive momentum can be seen only if the stock manages to give the breakout of 1500. But I don't believe that looking towards the price corrections along with the volumes, it will take a time to give the breakout. So I will suggest to exit from a long position from this particular stock.
Right. We've got a next caller from Chennai. Mohan is calling us. Mohan, very good morning to you. How can we help you today?
Yeah, good morning. Good morning. Hi. And actually, I got Jindel's stock. I got Jindel's stock 250 quantity at the price of around 251.68.
Okay.
Whether I'm holding this stock for 21 days. I just want to know whether to wait. Will it grow or else will it take too much time so that I can look for other stocks?
Understood. And so help me define this, Mohan. You're saying 21 days is what you've held it for. But you say, will it take too much time? Have you defined that as a month, as 2 months, as over a year? What's the time frame that you have in mind?
No, actually, if it grows up, I can wait for some other more than like 1 month. I can also wait.
Okay, I got your sense. Okay, ठीक है. I got an idea of what you want to know. Swati, on the charts, therefore, if you bought at levels of 251.7, would you hold on for a month's time frame?
Alex, as of now, the stock is under the consolidation phase, and I believe that on the weekly chart, it has given the breakout, but still we are not getting that kind of a spark momentum on the higher side. Since the client is not ready to hold on for the longer term durations, I believe this counter will give a slowly and steadily breakout will be seen in this particular round. Upside 250 is the breakout level. If it manages to give the breakout of level 275 to 80 levels can be seen. But the client is not ready to hold for a longer term duration. I will give a strict stop loss of 235. Try to bear more 5 rupees on a downside and hold your long positions. Probably in a day or two, we might witness some sort of a profit breakouts in the near term future. So keep the strict stop loss of 235 rupees and hold your long positions.
Okay, so that's with regards to where Jindal Saw stands. The next question is from Ajesh, who's writing in from Bengaluru. He's holding Inox Green 300 odd shares at an average price of 164.3. Wants to know if he can continue to hold for the next 3 to 6 months. He's sitting on a loss of 3,000 rupees right now. So, Adi, do you think in the next 6 months he can probably turn into green and maybe make some profits?
I don't believe there is nothing more chart structural formations on the positive side at the current market price. Currently, the counter is sitting at 153. If it's break 153 levels, which is the immediate support level, then we are likely to witness more selling pressures, which may take a counter towards to 145 and so levels. I will suggest if you're getting any uprise rally towards to 155, 158 levels, try to exit the long positions. This is not a counter to take for a longer term horizon asset. So sell on every rise strategy should be applied.
Okay, all right. We've got our next caller, Arvind. उत्तर प्रदेश से कॉल कर रहे हैं. Arvind, आप कहाँ से कॉल कर रहे हैं एग्जैक्टली और आपका सवाल क्या है?
सर मैं उत्तर प्रदेश बरेली से कॉल कर रहा हूँ जी. थैंक यू सर, आपने मेरा क्वेश्चन लिया और एनडीटीवी को मैं प्रॉफिट को मैं थैंक्स कहना चाहूँगा कि मैं बहुत कुछ मैंने जो इन्वेस्टमेंट किया है मार्केट के अंदर आपके चैनल के ही थ्रू किया है. मेरे पॉइंट वगैरह वो देख के कि काफी अच्छे इंटरव्यू वगैरह लेते हैं सर, समझ में आता है मुझे चीजों को.
वाह, ये सुन के बहुत बहुत खुशी हुई हमें. आपका सवाल क्या है आज हमारे लिए?
आज मेरा सवाल है कि रेनबो मेडिकेयर चिल्ड्रन एक जो स्मॉल कैप की कंपनी है, हॉस्पिटल्स में डील करती है. मेरे पास इसके 70 शेयर्स हैं 1434 रुपए पे. मैं इसको लंबे समय के लिए होल्ड करना चाह रहा हूँ, नियर अबाउट 5 इयर्स के लिए. तो क्या फ्यूचर है इसका, मतलब एज कम्पेयर टू आप लोग काफी अगर आप रिसर्च रिपोर्ट्स बना पाए इस पे तो. जी,
रिसर्च रिपोर्ट्स के लिए थोड़ा सा वक्त लगेगा, मगर मैं उसके पहले आप आस्था से सवाल कर सकता हूँ कि व्हाट इज़ द प्रोस्पेक्ट. आस्था, अगर आप हिंदी में जवाब देंगे तो फिर ये अच्छा होगा.
जी बिल्कुल। देखिए, अगर मैं रेनबो इस काउंटर की बात करूँ तो ये वन ऑफ द लीडिंग पीडियाट्रिक मल्टी स्पेशलिटी एक हॉस्पिटल है। अब इसमें जो नए बेड्स इन्होंने कमीशन किए हैं, उसके बाद किस तरह से वो इंटीग्रेट होता है पूरा हॉस्पिटल के अंदर और फिर फाइनेंशियल परफॉर्मेंस में वो किस तरह का एक रिफ्लेक्शन दिखाता है, वो एक देखने की बात होगी। तो मुझे लगता है कि अगर आपका नज़रिया थोड़ा यहाँ पे मध्यम अवधि का है, तो आप यहाँ पे थोड़ा इंतजार करिए, इसमें अपनी पोजीशंस में कंटिन्यू रखिए, नतीजे आने दीजिए, क्योंकि कुछ नए स्टेप्स जो इस काउंटर ने या फिर इस हॉस्पिटल ने लिए हैं, वो किस तरह से आगे इनकी वित्तीय जो परफॉर्मेंस है उसमें मदद करते हैं, ये हमें देखना होगा। सो ओवरऑल हमारे हिसाब से आपको अभी इसमें बने रहना चाहिए। वैसे भी अभी आपका कॉस्ट प्राइस लोअर लेवल पे है, तो कोई डर और चिंता की बात नहीं है। आने वाले समय में सब कुछ ठीक रहा तो हमारे हिसाब से 1600 से 1650 के दर्शन कराता हुआ ये काउंटर नजर आ सकता है।
बात है, क्या बात है। Wow, Asta, I'm seriously impressed by that answer, and I should take a few Hindi classes to speak to you properly the next time. I will bear that in mind. Okay, the next question is also directed towards you, and quickly change your mental gears to speak in English once again. Irida is the name of the counter, 185 is the buy price, and the prospects for the next 3 months are being sought, but I'm still coming to you because we have had the quarterly update and the loan disbursements are up as much as 31%. And I do understand that it is a lower base compared with your REC and PFC. But having said that, that 31% is a pretty robust rate of growth. Would you agree? And what are the prospects on the upside?
The prospects are pretty strong because what we are seeing in this counter that in fact they have diversified their funding also, and it is one of the best space to deploy the fund in if we talk about the green energy financing. So my idea here is to stay invested in this counter, and now this counter is enjoying the industry tailwinds also. So overall we believe that this counter is well poised to move till the level of 200 in the medium term. So remain invested in this counter is what we are recommending at this point of time.
That's with regards to where Irida stands. Our next caller, Varshini, is calling us from Andhra Pradesh. Varshini, hi, a very good morning to you. By the way, both Alex and I said that you have a beautiful name.
Yes, thank you.
Go ahead with your query.
Actually, I bought Geo Finance 10 days back at 294 price. Okay, 35 shares I bought. Shall I retain or sell for short term only?
From a short term perspective. Okay, I take this up with Swati. Swati, Geo Finance is the counter. What should she do?
Yes, my view is definitely positive on this particular counters. I believe that it has a potential to reach up to 350 to 360 levels on the higher side. So you can hold on those particular stocks for a mentioned targets. If you want to keep a stop loss, 320 is acting as a very good support level. So by keep 320 as your profit stop loss and hold your long positions for a target of 350 levels.
All right. Varshini, hopefully that answers your question. Snigdha is calling us from Hyderabad. Hi Snigdha, how can we help you today? Good morning.
So I just want to invest on 2 lakhs on PG Electroplast and Aurobindo Pharma. I have 4 lakhs of corpus with me right now.
Okay.
So is this the right time to invest on them, or if not, can you please suggest 2 stocks for short term?
Short term. And how do you define that? What is the duration that you're looking at? 3 months, 6 months, less than 1 year?
2 months.
2 months. Okay. So, Swati, on the charts, PG Electroplast and Aurobindo Pharma, 2 lakhs each, or would you advise against either of these and pick something else?
Yeah, I would like, my view is not positive on the PG electrolytes, so not to invest money into those counters, neither on the Aurobindo Pharma. Apart from that, I would like to give another 2 counters. Such one is Cummins India. Why this stock has been selected? Because on the weekly chart, the counter has given the breakout of a cup and handle formations on the light chart. Even we have initiated a buy call to our clients. 3408 levels are the current market price. You can invest at least in this particular counter half for money. I'm looking for a target of 35.50 on the higher side. Downside, it has a very good support at around 32, 33.20. So keeping that as a stop loss, you can carry a long position. Another interesting fact, not for a 1 to 2 months, but more than that period, Biocon looks very interesting. This particular counter has already witnessed a selling pressures, and after that it went into the consolidation phase. Now it's on the verge of giving the breakout. Slowly and steadily the trend is getting on a positive side. Currently the counter is trading at 354 levels. Downside, it has a crucial support at around 320. So by keeping that as your stop loss, you can hold on the long positions or create a long positions. For immediate target will be 400 levels, and beyond that levels 420 levels can be tested. So these are the two counters where you can park your money.
All right, for a 2-month time frame. All right, hopefully that answers your question, Snigdha. It's time now to hit the rapid fire round. And Asta and Swati, you know what this means. We'll throw as many questions at you over the course of 2 minutes. Let me start with a question on the hospital space. And we've got news on Apollo Hospitals today, but the question is on Indraprastha Medical Corporation. Asta, do you have coverage? If so, would you buy and would you invest 2 lakh rupees?
Not in this counter as of now. I think Narayana Hrudayalaya or Apollo Hospital are a better bet.
Okay, the next question is on Bajaj Finance. Karthik Ram wants to know if this is the right time to buy. Swati, on the charts?
Yes, you can buy 20-30% at the current market price. If you're getting any deeps towards to 900, you can add on. Upside, it has a target of 980 to 1000 levels on the high side.
Okay, United Spirits bought at levels of 1460. Srinivasan wants to know whether to hold for a period of 2 to 3 years, accumulate more at the current level. Asta?
Yes, one can accumulate, but not at the current level, maybe at the lower level of around 1380 to 1370, but it is a good bet for 2 to 3 year time perspective.
Okay, Kamath Hotels next counter. Aparna from Kerala is writing in. She's bought 120 shares at a price of 240. Wants to know if she can continue to hold for the next 2 to 3 odd months. Swati?
Yes, you can hold on this particular counter. The immediate target will be 260, then 270. Downside, it has a very good support at around 230. So by keeping that as a stop loss, you can hold your position.
Okay, Tata Motors bought at levels of 1107, elevated levels, 70 shares. And Surya Narayana wants to know whether to hold or exit. What's the view, Swati?
My view is for a shorter period of time, we will be cautious. I will suggest to hold on this particular counter by keeping a strict stop loss of 670. If you're getting any pullback rallies toward to 720, 730, you can exit your longs.
Okay, JK Tires is the next counter. Bala Subramaniam is holding 50 shares bought at 411 a piece. Wants to know if you can continue to hold. Asta, your view?
Yes, continue to hold with a price target of 390 to 400.
Okay, KPIT Tech for the long term, we've got a viewer who has bought, I do not know what level, but he's wondering whether to buy more at the current level for the long term. Swati, on the charts?
I will not suggest to take a long position at the CMP. If you're getting any deeps towards to 1150, you can add on, but not at the current market price.
Okay, all right. So that brings us to the end of the rapid fire round. Both of you, thank you so much for joining in. I do want to refer to what is on the screen right now. And in fact, this has to do with the latest update from Mahindra & Mahindra. This is, of course, the 1st of July. And so you have auto sales numbers. This, by the way, is wholesale data. So think of this as the metal that, or the vehicles that get pushed from the factory to the dealership. Three-wheeler sales have done well. Total sales are up as much as 14%. And this, I believe, is the automotive division, not tractors. So bear that in mind as well. Commercial vehicles are just about flat. I wonder about the utility vehicle sales as well. Passenger vehicle sales about 18% higher. Tractor sales are also out, by the way, up about 13%. So it's a decent number that has come through. Exports about 1% higher, but really the primary market for Mahindra & Mahindra is in the domestic market. Utility vehicle sales seem to have done pretty well. I would be curious to find out what the share of electric vehicles are in that space. 18% higher is a pretty good run rate, especially in a scenario where the passenger vehicle companies are facing a little bit of a torrid time on demand. That brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Know Your Company. I'm Harsh Saita, your host, and today we're going to be talking about Fino Payments Bank. Why Fino Payments Bank? One, there is plenty of talk around technology and banking, and Fino has been at somewhere at the periphery of it, or is it at the center of it? And that's what we'll try to understand better. But essentially, it's a bank where plenty is happening. They're converting from a payment bank to a small finance bank. They have applied for that license. How quickly does that license come will be the other big question. But it could well be a turning point in the way you look at the business as well. From the highs of the IPO price and the list price, the stock is trading now at a substantial discount, while profits over the last 3 years have compounded at a fairly healthy rate. And therefore, you want to start to understand whether this business has started looking interesting or not. So first question that I really want to know is that how much can the existing business grow by? You have your traditional business which they do at this point, and I'll explain that business to you. And thereafter, the kicker will likely be the small finance bank license, where they go into lending, and how that journey goes along will be completely different, and that will be a different lever both in terms of valuation and growth. The second piece is what's the outlook like on commission based income. What do they do in commission based income? One, they do remittances. These days for remittances, say for example you have a house help who you pay 20,000 rupees to. They have to remit some amount or some part of that amount to their village. Earlier they used to take the help of someone like a Fino to make that payment to their village, and their parents or family would collect it from an outlet of Fino. But not anymore. With UPI really well entrenched, you could well see that remittance number has come off, and which is what in some form or shape also impacts the business. Is there a substitute to that, or is lending the only thing? Then of course there's Aadhaar enabled payments. For example, all the government related subsidies and incentives are now done through Aadhaar related payments, all done over UPI. And then there's micro ATMs. Who uses ATMs anymore, or rather there's been a sharp reduction in the usage of ATMs, and therefore does that also impact the business? Competition in loan referrals. That's the other risk, right? So they've ventured into loan referrals, and then you have these large players, a Paytm, a Paisabazaar, who have come in and are disrupting, and they are all online. None of them are offline, and therefore, is that business really seeing pressure? What changes with a small finance bank license? Now, this is the big question, because you want to know whether the small finance bank license adds risk to the balance sheet in a substantial form, and if they are lending, what is that risk? Because if you are buying into the stock or you are already invested, you want to know what the risk will be of getting this license and how they intend to lend. Now, the fifth question is, how quickly are you looking to get a small finance bank license? By one, I mean an SFB license. How quickly do they get it? How quickly does the strategy unwind as soon as they get it? Do they already have a strategy in place or not? And what happens to the promoter holding post the SFB license? Promoters currently hold around 75% through an entity, single entity. That structure may have to unwind at some point. Now, of course, that may take a year or two, but what's the thought process behind that? And the last question I want to ask them, where are you investing at this point? You're generating cash, you're a profitable business. Few businesses within the payments technology startup space are actually profitable, and this one is profitable. So where is it that they are investing that nearly 100 crore odd of profit that they are making? So all of that and more, but first let's understand what the business is all about. I'm going to start off with what Fino Payments Bank does as of today. The core business of Fino Payments Bank is digital and payments. That's what it essentially is based on. They've gone deep into rural, set up micro ATMs, and I'll explain this, and they have done digital through banking. So they do remittances and then they provide financial services. So basic banking, remittances, financial services. Within basic banking, they allow you to maintain a current and savings account. They enable fund transfers, and they help you check your bank account through their app, which is all digital, all UPI. They've linked that entire stack to UPI. But what Fino cannot do is they cannot lend. Because they are a payments bank, they have a payments bank license, they absolutely cannot lend. So that is where the small finance bank license comes into play. They've applied for it. Earlier, there was no intention to do that. When I spoke to them at the point of listing, they said, we don't intend to lend at all. But that seems to have changed over the last 3 years. What has changed there is what I'd want to know. How they operate through an asset-light model, and it's phygital in nature. So one, they attract the customer into what is called a micro ATM. You'll have Kirana stores which will have a simple micro ATM machine which allows you to insert your card, enter your PIN, and check your bank account balance. Once you check your bank account balance, you can withdraw from it. Say your balance is 10,000 rupees, you can withdraw 2,000 rupees. But there is no ATM machine there. It's actually the Kirana store owner who gets paid a fee, and 2,000 rupees is handed over by the Kirana store owner to the customer. So it's a very unique concept in that sense. And they have nearly 20 lakh touch points and merchants who they have tie-ups with, and therefore they're one of the largest micro ATM players in the country at this point. I want to understand, can that continue to grow at the rate at which they've been growing? In terms of customers, well, they serve low-income individuals, migrants, small shop owners, and rural consumers. Basically, the target customers are customers with limited or no access to traditional banking and traditional bank branches and traditional banking channels. Once the customer is onboarded, then there is a simple app through which the customer can transact. So once that attraction is done, then the customer can transact through the application. So it's a phygital model. It's asset light because it does not require the company to open ATMs or open branches. That is not required given the way in which the model is structured. So where does it make money from? Let's understand it bottom up. Fino earns money mainly one through transaction-based fee that's on your screen. Then it's interest income. Mind you, these customers maintain balances. They may be very, very small balances, but they maintain balances nonetheless. And what happens is Fino has access to that money. That money gets parked with the RBI, and the RBI pays an interest out to Fino, which may be a very, very small or a thin interest, and therefore the net interest income may be very, very thin, but nonetheless that is income for Fino. So that's interest income they make, and then they make money on commissions. Any withdrawals, depending on the type of account you have with Fino, any withdrawals you make, any remittances you make, all of those get charged, and along with it, any loans you take. So the loan syndication that they do, any insurance products that get sold to you. All of those come through commission. So you have 85% of the revenue coming in from merchant commissions and fees on transactions. Then you have interest income from investing customers which invest in customer deposits in safe instruments, which Fino invests in safe instruments. And then there are commissions from selling insurance, referrals, value-added services and the like. And that's where all of the almost 85% of the top line essentially comes from. Let's talk about the exact services that they do. One, they do money transfers, and this is mainly domestic. Then they have Aadhaar-enabled withdrawals that they do. They do UPI and bill payments for their customers. Savings and current account maintenance for customers. Micro ATMs, cash withdrawals, deposits, does both withdrawals as well as deposits. Debit cards and prepaid cards are issued by them or are enabled to be issued. Insurance and gold loan referrals are made. And then there is CMS, which is cash management services. Now, what is cash management services? And this is a new opportunity for them. Basically, if you are a store, if you are a Kirana store, you have lots of cash with you. What they provide to you as a service is they will pick up the cash from your shop, deposit it into your account for you. That makes life easier for you. And there are a few players in this cash management services business. It's a difficult business to do, but given the way in which Fino Payment has penetrated, it becomes easier for them to do this business. So cash management services is the other thing that they do. What does Fino spend on? One, interest payment on the deposits that they take from their customers, merchant payouts and agent commissions that they make, employee salaries, admin costs, the general, and then you have tech and platform expenses, which enables digital for their customers. Now, this is all with regard to Fino. So we hope we've given you a good coverage with regard to how Fino operates. Now, let's talk about some numbers and let's break down all of the 8 metrics that we'll talk about today. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of these. Let's start off with the income statement. I'm going to start with the top line. 22% growth on the total income number over the last 3 years, which is very healthy compounding that we've seen. We'll look at EBITDA here because, mind you, this is not a bank. This is not your traditional bank where you will look at operating profit. You will look at EBITDA because what you want to judge from that number, or rather EBIT or earnings before taxes, what you want to judge from that number is compounding happening there. Because post expenses, you want to see whether the company is still making money. And what you are seeing therefore is profitable growth coming through. 26% 3-year CAGR. That profit which has fallen from FY24 to FY25 is largely related to taxes that they've paid. Mind you, it was a loss-making company earlier and therefore they had carried forward losses which could be offset against any profits which they made all the way through FY24. So they were paying 0 tax till FY24. Now they've started paying taxes and that's why you're seeing that recalibration of profitability. But that likely to a significant extent is done. Now what we'll see in FY26 is a normalization. Hopefully there'll be growth from here, from this 86 crore number, and we'll quiz management on how that happens. But a 26% growth CAGR, not bad on a 3-year basis. So we've given this a thumbs up. Now let's look at the balance sheet. You look at the equity is at roughly 83 odd crore. It has retained earnings of roughly 600 odd crore and it has some amount of borrowing. But typically, the capital adequacy is what is relevant if it converts to a small finance bank, and it has an 80% capital adequacy. So no requirement of a fundraise whatsoever, at least for the moment, unless they start taking on too much debt, which at the moment does not seem to be the case. So that's how the balance sheet is stacking up. We'll give that one a thumbs up also. It's a lean balance sheet for a 2,000 crore, 2,300 crore market cap company. So that's how it's shaping up. Now, let's talk about cash flow. Now, cash flow, very simple metric, right? I'll compare the cash flow from operations to the profit after tax. 86 crore was the profit after tax for FY25, 76 crore odd of operating cash flow, not looking bad. and therefore we'll give this a thumbs up as well. I want to understand one thing from cash flow. Where is it that they are investing? Is there substantial pockets where they are investing for the next leg of growth? That's the other thing I want to understand, and we'll understand that from the managing director and CEO as he joins us. Let's quickly look at return ratios now, because the cash which they are investing needs to have a healthy return profile. We've shown you the last 3 years ROE number. We've given it a neutral because it's just about in early teens. What you would want is a ramp up of this. But mind you, there's one thing you want to understand. As businesses achieve scale and size, the ROEs start to creep up automatically. This one is a small business. It's a 2300 crore market cap business. I want to understand whether it can achieve that scale and size, and ROEs can see a lift or not as a result of that. So we'll see how that plays out. Now let's look at shareholding pattern. So we've given this a neutral, more to be seen on the ROE front. Shareholding pattern, 75% is owned by promoters. Let me pull out that promoter holding. It's the promoters that hold this one are called Fino Paytech Limited. And Fino Paytech Limited is again owned by a clutch of companies, including the likes of an ICICI Bank as well. And then you have a BPCL as well, which has a holding in it. So it's got an interesting set of promoters with it. But this will be subject to a reverse merger as well. There will be some bit of overhang as that reverse merger plays out. But that is only post the small finance bank license being received. So a lot of restructuring will likely happen within this promoter holding group. There's very little DI or FI interest at this point. It's a small company as well. And therefore, you'll want to look out for some of these things. We'll give the shareholding pattern a neutral as well. Let's look at street cred now. The one thing that stood out for me, and those numbers flashing on your screen, is the fact that if you are an IPO investor, you've not made money on this one. And that's a possible problem, because as promoters, as management, you would want to leave some money on the table for the retail shareholder. That doesn't seem to have been the case. Maybe have been the intent, but wasn't the case. That's not played out. And therefore, what you want to see is some of that will likely either have to play out very, very quickly, or you've seen some bit of pain within that shareholder pocket, which have bought since the IPO and continue to hold. So I want to understand what's in it for them, right? Can we see a substantial ramp up in the numbers, and that likely might impact stock price? That's something, of course, that we'll understand better from management. But for the moment, we'll give this a neutral, because stock price performance not really outstanding, but just about average when you're looking at it the last 3 months or so. 24% returns is what it's given. Now let's look at how the street views this. There are 3 analysts that cover it. We'll be cautious about this one. 3 analysts that cover it with a return potential of 13%. While the returns are okay, but what really stands out for me is that there are just 3 analysts that cover it. It's a 2,000 crore company where 3 analysts cover it. So not bad in that sense. We'll give this one a cautious neutral as well. Let's talk about valuations last off. Now, 2 ways to value this, right? One is price to book, but this is not a traditional bank, and therefore price to earnings is the better way to look at this. And when I was looking at the price to earnings at 11 rupees a share, which is FY25 EPS, it's trading at roughly 25 times, so trailing 12 months. But 1 year forward is trading at 22 times, and 2 years forward it's trading at roughly 18 times. That's how the valuations are stacking up. We'll give this one a neutral as well, because not necessarily something which is very cheap, but is there an upside surprise to earnings is what I'd want to understand. Let's quickly pull up all of the ratings now, because we've summed it all up. Now let's quickly pull that up. That's what you have. No issues with regard to the first 3 metrics, and the other 4 are also a neutral. No thumbs down. If at all there's a negative bias, it's with regard to street cred. That's something you'll want to look at, because that's not helping its case at this point. But 5.5 on 8, very, very fair from a KYC ratings perspective. Let's go across. We're joined by Mr. Rishi Gupta, who's the MD and CEO at Fino Payments Bank, joining us live. Good morning, Mr. Gupta. Always good speaking with you. I want to start off by understanding where does growth go from here? You're currently at around 19 lakh merchants. Can that number continue to grow? Can you continue to penetrate, and how's the competition looking at this point? Sir, I believe you're on mute.
Yeah, can you hear me now?
Yes, I can, sir.
So, good morning to you and to your viewers. So, good update on the KYC, and 5.5 from my point of view looks a little low, but I leave it to you and your analyst. Coming to your specific questions on the merchant addition, I think that is an area we have been adding about 1.5 to 2 lakh numbers per annum. So we'll continue to add that number of merchants as such. The only thing which has changed over the last 3 years, I would say, is that Fino was largely, the revenue and the profit was largely coming from the physical network of our merchants and the products which we used to sell through those merchants. In the last 2 years, and specifically in the last 1.5 years, we have seen there's a large push because of the UPI ecosystem which has come up. And that is where we see a digital transaction also growing to a large substantial part. Roughly 49% of our transaction value is coming from digital now. So Fino has become both a physical and a digital company now. So we have become truly a phygital company. So not only the merchant growth, but the digital growth makes it even more robust, and more avenues for us also to make revenue and profits.
And sir, how is the loan syndication business going for you? The loan referral business. Again, are you seeing competition there? How are take rates looking at this point? How is growth going for you?
On the lending part, we have applied for a small finance bank license. Yes. So internally, we have working with a couple of NBFCs on the lending side, largely around gold loans, micro lab, kind of affordable housing are the 3-4 products which we are focusing on. We do about, between us and the BC business, about 150 to 200 crores we do every month on the gold loan and other products, so to say. While we are growing that number, but I would still believe that with partnerships, you are dependent on the partners, whether it is for the rate of interest or the product configuration or the geographies which are there. Once we get a small finance bank license, at that point of time, this learning will definitely help us to get into those businesses in a more controlled fashion, where we control the product per se. So it's been a good growth, but I think the opportunity and the demand is far more as such. So we are going along with that, and let's see how it spans out in the next 9 to 12 months.
So give us the outlook on top line. I'll reserve a couple of questions on small finance bank. Let's keep that out of the picture for the moment. The existing business on 1850 crore of top line, where does it go? Say in the next year, say in the next 2 to 3 years.
So for that, you will have to probably break up this entire business into 3 lines.